Hello student, welcome back to IBS. Today we are going to learn about balance sheet overview, in which we are specifically going to learn about inventory. So inventory would be quite detailed, and we will be having a lot of session on this because inventory has a lot of different method and inventory valuation method. There are IFRS and US GAAP are involved. So what they are suggesting, based on that we need to report our financials. So since we are learning financial reporting, we should know the IFRS and US GAAP so that we can calculate our inventory value or ending inventory valuation and cost of goods accordingly. So let's jump to the inventory. So first of all, what exactly the inventory is? As per me, inventory is something which we purchase to sell so that you will get future benefit. For example, if you have purchased particular asset like any toy, okay, so that toy you have purchased and then you will be selling it. The purchase, that time you have incurred expenses, in return you got the asset. Okay, that is your current asset because we are going to sell within a year or within one operation. So that is our ultimate intention. So that is why we will put into the current asset. When we are selling it, that time we are getting benefit from this asset. Okay, so that is why inventory are being considered under asset. So let's read it out. Inventory is defined as the goods and material a company hold for the purpose of resell, as I told you, or production, or we can also buy material, raw material, to resell also. And it also includes all the item related to production like raw material, labor, indirect material. Okay, so all this thing will come together and then it become inventory for you. Okay, so work in progress related stuff, okay, and raw material and finished good, these all are the part of inventory. Okay, so this is what they are trying to say here, to sell customer or store for future uses. Okay, so basically, so why we are creating this kind of production or we are purchasing a particular product, so that we can sell it to customer or store for future use, or maybe this kind of material we can use for benefit purposes. Okay, so basically you are storing it so that as and when demands come, you will be able to supply those kind of inventory. That time you are not been in such a position where you are suffering from a stock out position kind of stuff. Okay, inventory is recorded as a current asset, okay, on the balance sheet, and it is critical factor in determining company profitability, okay, as it affect the cost of goods and overall financial performance. Obviously inventory will, if in case if you are a manufacturing company or if you are reseller, so your major cost would be inventory. Okay, and in balance sheet also, that would be the major cost in your income statement, like cost of goods. Okay, inventory will be converting to cost of goods in your income statement, that we will learn in detail. Okay, here is the key component of your inventory: raw material. Raw material is the material which we are purchasing, okay, so that we can convert this raw material through this process as a finished good. Okay, for example, you are making a toy, for that you have purchased plastic. Okay, those plastic we will put into the operation and then it will become our toy. So the raw material will be plastic, and then in work in progress we will be having a lot of machinery, okay, and their rent and the labor, those kind of thing will be added. Then also your raw material cost will be added, then we will get the finished good. What does VIP mean? Partially finished good that are still in the production. For example, you have used all your material, labor, and machinery, and then we have created this product, but this product has been just given the shape of a particular toy, but it has not been painted, or it has not been suppose you are making a baby toy in which you have made the design, but you are still missing to put eye and, okay, and put nose, put cloth, then it will become, finished good. So there are several steps. Okay, so if any of the step is missing, then it will be considered as an VIP. Okay, unless it is completely finished, that will not be considered as an finished good. I hope it is clear to you. So with regard to importance of inventory in accounting, inventory is obviously very crucial element for accountancy, specifically to companies involved in producing and selling. If you are a manufacturer and if you are a reseller, okay, or trader, so you are purchasing product and selling it out. So for you, inventory would be the major cost, and that is why it will be very important whenever you are in a startup or something. So you should know about the inventory and their legal compliances with regard to IFRS and US GAAP, so that you can easily run your business without having any compliances issue. So that is why it is very important. Okay, and also it is one of the largest item in the balance sheet as discussed, significant of income statement, integral to calculating the cost of goods sold, which is often a major expense of merchandising company, as I told you. Okay, so this is really biggest cost for any of the company. So now we have this beginning inventory. Whatever inventory I can assume, maybe your inventory is somewhere around at the beginning of the period you are having 10 inventory. Okay, after that you have purchased somewhere around 90 inventory. Okay, at the end of the period how much would be the our inventory, how we will know? So there is a few method like physical counting we do. Okay, and if there is system maybe calculating. Okay, but at the end of the period always we need to do the periodic counting, that we will give you the inventory. Maybe our ending inventory is 30, it is coming, but we have these two information like beginning inventory we know already based on our balance sheet. Okay, report we know that how much inventory we were having. Now we are talking about in terms of quantity, not multiplying the price. Okay, so balance sheet point of view we know how much inventory we have and how much we have purchased throughout the period, that we will know through our purchase. Okay, through accounts payable. Okay, in accounts payable whatever vendor in which you are purchasing, based on that you will get your inventory detail. Also you can get this information from your inventory. Okay, there is a specifically inventory module are available in all the systems. In that also you can get your total purchase. Okay, so whatever the way I'm just giving you this how actually in company practically we are calculating this kind of information. Otherwise I would have told you we have this much inventory beginning and we have purchased this much, so our available inventory is 100. If we have ending inventory is 30, then our cost of goods would be charged for 70 unit. Okay, so this will be the simplest way to explain, but I'm explaining you all these things so that you can link and understand where you will get what information in your system or in your company. Basically all I'm trying to give you more relevant and more detailed information. Okay, so this is total number of quantity we have purchased 90 unit and we got the information from this kind of method, and then we have available for sale. This is called total cost of goods available for sale. If you reduce the ending inventory, you will get cost of goods. Okay, this is the method to calculating cost of goods. Okay, or if you want to know your purchase inventory, so what you will do, if you have information with regard to cost of goods sale, if you reduce your beginning inventory, you will get your purchase. And if you want to know your beginning inventory and you have cost of goods available for sale, that quantity and price you have, then you can reduce your purchase inventory so that you will get your beginning inventory. So these are the method to calculate. Okay, if you have cost of goods and if you are available for sales the cost of goods, then if you minus this cost of goods from this, you will get your ending inventory. So these are the methods which are being widely used all over the world to evaluate the overall value of your inventory. Okay, thanks for watching. See you into the next session. Stay tuned. Thank you very much.